Greetings, traders. Last week was a challenging one for retail traders. Despite the market maintaining upward momentum, we saw a lot of choppy, bidirectional price action, making it difficult to predict and even harder to trade. When a market moves like this without clear conviction, it feels like a spring waiting to snap, and timing that moment is no easy feat. This week, however, is pivotal. Major mega-cap tech companies, Meta, Microsoft, Apple, and Amazon, are all reporting earnings. These giants are likely to act as the compass for the next market direction. So far, key macroeconomic events such as the CPI, PPI, and the FOMC haven't been able to disrupt the market's bullish trajectory. Now, the spotlight shifts to earnings. Will they provide the catalyst needed to finally move the market decisively? On the macro front, the FOMC rate decision is scheduled for Wednesday, a double whammy when paired with the mega-cap earnings. Current market sentiment is leaning toward the Fed holding rates steady. However, that in itself could add pressure, as it reinforces a narrative of a stagnant policy environment amidst a market that's already feeling stuck. On Thursday, we also have PCE index data, but compared to earnings and the Fed decision, it may not carry as much market-moving weight this time around. Technically speaking, the NASDAQ came extremely close to my upside target of 23,500, printing an all-time high of 23,476 before showing signs of a potential pullback. If this week's events unfold favorably, we could see a continuation toward the next major level at 24,000. On the downside, watch for support at 23,312 and below that, 22,766.50. Meanwhile, the S&P 500 hit my projected target of 6,400, an impressive milestone. Should momentum continue, I'm looking for a move towards 6,500 this week. Key support levels to monitor are 6,400, followed by 6,254. Turning to the U.S. dollar index, we saw a test of the near support level at 97.34. Interestingly, the chart is beginning to show signs of an inverse head and shoulders pattern, which typically suggests a short-term reversal or rally. This implies we may see a pullback in equities toward the end of the week, especially if the dollar climbs back to the 98.713 level, either before or after the key events unfold. That wraps up this week's market outlook. Stay sharp, manage your risk, and remember, this is one of those weeks that can define the market's direction for months to come. Thanks for tuning in, and I'll catch you in the next one.